Good morning, friends and traders. Nalinakshi Swami here. Yesterday, everyone wondered why they got trapped actually. They failed to look into the daily chart, what has happened in the daily chart, where are the levels, where the Nifty can move. They failed to analyze, they get trapped. See, they were thinking why it is fallen so drastically. So I'll show you without drawing anything, I'll show you the levels. See, I'll zoom it out. I'll take the tool, horizontal tool, and I'll placing on the wicks. Wicks are nothing but order flows. So I have to include all these things. So I'm including all those things. I'm getting, this is the 17,455, 460. From there, Nifty had gapped down and faced resistance around this area. That was the area price of 17,237.75. Now, this was the trade gap down and a doji was formed. So you need to mark the high and low of these, high and low of this candle. So if you mark the high and low of the candle, and you should see for where are the order flows. See, if I see this is one resistance, and another resistance, if I see, was this. This was the resistance where previous day Nifty had reacted. If I go to the smaller time frame, let me go to the 4-hour time frame and I have to refine the levels. If I go on there, I'll find these are the levels. I get refined levels to this level, 17,312. Let me go to the 2-hour chart and let me refine those levels. Is it possible to refine it? Yeah, I can refine it to this level. Let me zoom it out. Yeah, yes, I'm including, yes, I have to include this wick also. It comes to 70, reset. It comes to the level of 17,246 or something. Okay, so I'm set for let me go to the smaller time for the trading. What has happened in the yesterday's trade, why it has fallen. So it opened like this. This was the candle. Opened here above this level, 17,261, and made an high of 17,275.65. And low of 17,178 and closed at the 17,203. Later, it started falling off and it tried to find support over there. Why the support? Because this was the candle which trapped this one. So we need to mark because algos will find all these levels. So I'm marking this level. I'm including these wick and everything. Okay, so I'm including all those things. Why this level is important? This is an equal height. Equal height. These are the levels which are created during the range. Equal high and equal lows are created. What happened? Before closing, this equal high was trapped because there is stop losses. Lot of liquidity over here. And even here also there is above this area, there is liquidity. Let me mark this also. So in the morning, see, they pushed up and they closed over here. Today they gapped up and they hunted these stop losses because this is the level 17,330, and so whoever gone long have got their stop losses over here because there was no trade. You must know this. There was no trade. There was completely no buyers and sellers were engaged. So there is liquidity because this is a counter actually. Buyers and sellers were engaged. Since buyers and sellers were engaged, there will be stop losses will be there. See, whose stop losses will be there? Stop losses of the buyers who have gone. So this is the order block. This is the last red candle which was responsible for they trapped this and they have gone. So there are many in this area, there is vacant space, empty space. So whoever gone long from this area after seeing the breakout, there are stop losses in this area. So stop losses in this area. You can see if I mark there, it will come to exactly that level, order block level. So it hit the level, Nifty. People forgot that many people thought it will go and fill the gap. So it is not his intention because he has gap down from this level. This is a double gap down and easily he has come down. And now throughout the day, what happened? Throughout the day, actually, the person who has gapped up engaged all the buyers and sellers. Buyers and sellers and created an illusion that it will break out of the range. Break out of the range. And you can see the candle. If you mark this level, you can see the candle could not close anywhere above this level. Above this level, or it could not cross this order flow. This was the high, 276. They tried to mitigate this, and they finished their distribution and they started coming down. Slowly they coming down. So you can see they created a big bullish candle as if to engage the buyers. Engage the buyers, but they could not cross above this resistance and it started coming down. They created a range before. In this area, they created a range. You can see clearly equal lows. when equal lows are created in a range, people think it is a multiple support and they will try to place an order by order and they will go long. They will go long. That is a retailer's mindset. So when equal lows are created, one should be careful actually because stop loss hunting will be there. In this area, because I think you are going long, I am going long, I'll keep my stop losses beneath this because this is the big candle. Big candle, that's what every trader has been taught in the market. Technical analysis, if you see a big elephant bar, it is a big buyer is there. So you need to go long, break above this, and trend continuation will be there. Of course, trend continuation was there. You can see series of higher highs, but can you see series of, see the candles, see the candles. They were not able to go, I mean, these are the candles. There is no strength in the candle. And this candle went up to this. In a live market, it is a big bullish candle like this. Big bullish candle trapping the people. The people might have placed orders like anything, thinking that FOMO. FOMO is nothing but fear of missing out, thinking that I'll miss out because it will go and hit the level of 17,312 to 17,400. They will think that it is a gap. They created like that. So, see, they came down, made an high, higher high. This is an higher high. But before going there, they created an equal low. Whenever equal low is created, you should be careful. Definitely they will stop. And see, this was the range. They created the range. This was the range from morning 9:30, 9:45 to up to 12, 2 o'clock. 2 o'clock. See, definitely people would have thought it is the breakout while going home. People might have gone long, they got trapped, they had to cover their position. See, there is a liquidity. They might have kept, these are the people, late entry people, they might have kept their stop losses over here. And so they have to cover their stop losses when price pushes through this. Price pushed to gap down through this level. A single candle pushing 15 minutes candle pushing through this level means big player is engaged. Big money has come into the market. It will not sustain. So if you were prepared for the levels where it can go and where it can halt, you could have made money, or if you would have used your all the technical analysis, price action, price behavior, and how the order flow is created, how the big institutions play in the market, then you will not get trapped. You will not get trapped. You will not be in wrong position. And now, let me come back to the daily level. See, where this Nifty did stop? It did stop at this order flow. Order flow and closed, went up to 16,817 and closed at 16,952. 817 to 952 is almost 100 points. Let me remove the drawings. Almost 100 points above this. Today, Nifty, SGX Nifty is showing. So gap up, gap up. See, you have got all the boundaries over here. All the boundaries. This is the boundary, 17,072, 17,000, 16,950 and 16,823. This is the midpoint. 16,969 is the midpoint. There is an equal low. This has been trapped. So stop loss hunting has been taken place. Now, what they can do? What they can do? This is one more level, 17,101. Why I am finding minute levels is because nowadays trading is happening in the form of algo. So machine trading. So machines will find the minute levels and the orders will be placed automatically. So you have to compete with the machines. If you do not have algo system to trade, if you are a trader with manually, you should compete with the algo system and you should know minute levels where exactly it helps in scalping also. Small pip will help you to fetch a lot of money. It makes lot of difference in your trading. Now Nifty is gapping up to, gapping SGXFT is showing as if it is going. Let me check what is the SGX Nifty status. It is showing 1725 and it has gone up to 17,076. If you go and check minutely on the lower time frame, you will get that 17,076 also. So let me change the time frame and I'll go to 5 minutes and I'll show it to you. 5 minutes or 1 minute. Yeah, this is the level 17,032 and 17,041. It has gone up to 17,076 here, around this area. So minute areas, they will count it, they will trade it actually. If you go to 3 minutes, it may be clear. No. Here is the level 17,032 is the level. It trapped actually this seller and it went past this. This is the, so they definitely they will go past this level. Go past this level, and this is the resistance 17,071 is the resistance from where it has fallen down. So it has gone little bit higher. Let me check the high of this candle. It is 17,077.61. That's how the levels are played in the market, and it may another level is 17,122. We do not know how do they play in the market, where are the levels played in the market. So in the live market, you should be able to decide. You should know where are the levels, where Nifty can go, where there is no order flow, because there is no order flow. Completely only here up to here, from this area till this area, only in few areas buyers have been engaged. 1 minute, I'll show it to you. Here in this block from 16,930 to 17,031, some buyers are engaged here. So it's halted here and it induced liquidity as if it is going to go up 16,932. That is 3 minutes, 3, 3, 6, 3, 9, 10 minutes time. Some buyers have been, liquidity has been induced over here and trapped. These buyers have been trapped and it has come down. Now it is going past this level. Going past this level, it is showing like that, and you have to work. So there, what is the idea of this? There is no imbalance actually. It is total imbalance. No retailers, nobody has engaged. Big money has pushed through. Only in few areas, some retailers have entered and got trapped over here. Why they have got trapped is further some levels on the 4-hour chart. Let me check. These are the levels. 16,986 and 16,975. These are the levels. So some liquidity has been created over there while coming down. That is in the minute time frame. Okay. So that's how you need to. And what can happen after such a huge fall? See how it has fallen. This is a big gap down. Whenever you see a big gap down, can you see a big gap down, big imbalance? Next day, slight pullback, buyers are induced, and then they got trapped, and see the movement of the price. It has come down. Like that, they will engage some buyers and sellers. Liquidity counter is created and they will find their destination. Where may be the destination? Where may be the destination? This is the breakout level. This is the equal high. Price has broken through. Then when it is broken through, some liquidity already has been created because this breakout candle has been trapped. So probably it may come to this level again. Already it has stopped again and to retest, and it may take off to the upside. So you need to wait patiently for this level to come back, yesterday's level. Within that yesterday's level, some buyer has to be, this buyer has been trapped actually. This is the buyer candle, it's been trapped. It has to come and price action has to show some buying, real buying in the market. Unless you see the real buying in the market, let me remove the drawings, you should never go long. Today, you have to see the price action and wait for this and mark all these levels. This is an order flow level. So this becomes a demand area. So stop loss hunting has been taken place. So if they go like this, they will be in drawdown. Definitely they will come back and mitigate this area again and trap the people who are buyers, gap up and buyers, and it will come back. So you should patiently wait for this level again to retest and show some real buying. That's what I'm explaining to you. This is the simple logic. If you understand the simple logic, you will be a successful trader. Okay, friends, thank you very much. Nalinakshi Swami, signing off.